Hello, welcome to the market weekend review. It is March 16, 2024. I'm shooting this stream early, barely after 6 a.m. in the morning, but I have a busy Saturday here, so I'd rather get this done with and then get going with the rest of my Saturday. First up, BTC. Yes, it is still in the bull trend, even if it's consolidating here. And to be frank, I don't mind. Give me a chance to accumulate. I have a bunch of buy orders um, that if this was in the during the opening trading hours of the stock market, my I bid would have triggered here. I have well, maybe last night I have ordered into buy I bid equivalent in 68, 67, 66, 65, all the way down to 63. So to me, anything in this gray area, the zone, is support. It was uh, resistant for a long, long time, going back 4 years, 3 years. So just like other zones, see, like this zone here, it was resistant multi-year, and then it turned into support, and then off we go. So right now, and then this here, this next level, which is perhaps the biggest surprise. This was not a surprise to see a check back. This barely barely 2 weeks, not even 2 weeks of consolidation here, and then boom into the next one. So this was a little bit too much too soon, and the breakout, of course, didn't last very long, and then boom, we back into support. So that's fine. Um, you know, can't be too spoiled after you had such a. We literally have a 50% return since February. Yes, I just said that. 50% return since February. So chill a bit if you are one of those crypto bros that are screaming, crying that it's over, bear market is here, back minus 75% kind of nonsense. It's what I learned about crypto since I got involved since 2017 is just avoid the crypto bro. Okay, I used to listen to the crypto bro, but I learned quickly since 2019 to avoid the crypto bro. Just use TA as your guide and trade accordingly. Like anything else, use TA. Okay, the crypto bro are usually full of emotional reaction. So for me, right now, I did transfer more money into my Coinbase account to buy the actual BTC, to add to my actual BTC. Um, Lower. I told my son the same thing. Lower. We're not paying anything below 65. Yeah, we take it. If it's below 65, between 65 and 63, we add. Okay, and we add below too. We DCA, dollar cost averaging in. All right, so that's my take on crypto. All right, TLT, back into the zone of support. Is it a surprise? No. Economic data, once again, too strong. Nothing you can do about it. I give up, to be honest, on paying too close attention to econ data because it is fake, it's fake, it's full of nonsense. It doesn't make any sense to me. Um, and if the Fed want to use phony numbers to back up whatever they're doing for political reasons, who cares? At this point, if you use TA for buy and sell decision, yes, buy here, sell cover calls up there, and it's back to buy. It is if anything in this chart show you outside of the crazy October madness, yeah, it's support, okay, support, breaking, support, well, resistant, and then support, support, support. Okay, so if you want to buy TLT or sell 92, 91 put spread, good idea. Right now is the time to sell 91 put spread. 91.88. That's what I'm doing, right? Every time I get into the 92 range, I'm selling 91.88. Every time I get above 95, I'm selling 96, 97, 98 cover calls. Rinse, repeat. Rinse, repeat. Okay? Nothing else you can do there. Since we're talking about TLT, let's talk about gold. GLD. I trim on this, however small I did to be disciplined. Is it time to buy back? No, no, okay? It's not time to trim or buy anything. I'm holding, that's fine. The 20 MA is gonna be rising, all right? So could there be a major pullback in gold? If there is, it's a buy, okay? For a long time, if you follow my channel, I talk about buying gold at the 200 MA. Well, it might be a long, long time before we see, the 200 MA is rising slowly. Okay, it used to be down here. My goodness, 12 months ago it was 165, and now it's 183. Okay, I was hoping to be able to buy on this down move right here. I was looking at perhaps 182, a chance to grab some more, but no. Now, would I buy at 195? Yes. Not 194-ish? Yes. Any check back, retreat, correction into this zone that used to be multi-year resistance could be a major support. Okay, so let's pan back 3 years to see. See, 3 years. 3 years, okay? As always with TA, what used to be, I'm not sure what this is here. Let's delete this random nonsense. Remove drawing. Yep. But what used to be resistance should be strong support. Okay, so that's GLD. GDX, the right move was sell cover calls, 30.5, 31. That's what I did for the past couple weeks. I did let a couple hundred shares assign at 29.5, which was fine. I sold naked puts, 28.5 and 29. They expire worthless. I reload on some of them, and I will keep repeating. Okay, I don't mind reacquiring the share that got assigned at 29.5, a dollar below at 28.5. But until then, I will look on any pop in the 30 plus range to sell 31 to 32 cover calls. It is that easy to do. Rinse and repeat. The position is in profit. Okay, so it's looking good as far as GDX. Not as good as GLD. All right, so but it is off the floor. Since we're talking about that, let's talk about oil. Thankfully, at least that's one of the few right thing that I did. Okay, I was eyeing shorting USO for weeks, and then I said last month, no, I don't like what I'm seeing. Even though, I'm not bullish on the economy, oil is doing something that I don't like to see. Rising, hurting the CPI, all of that. For those that pay attention, yes, gas is getting up there again. It used to be at the low last year down here in Florida. A gallon of gas was under $3.10. It was like $3.09 at Costco, $3.08 at Costco. I don't think for sure I can't recall paying less than $3. If there was, it would have been way down here. Okay, way back in December. But I don't recall if we were under $3 for very long, like $2.98, whatever it was. But now you're talking $3.50. 340 at Costco. Outside of Costco is 360, 365. I'm sure in other state it could be $4 or more. Not good. Okay, this is not good. This is part of what's wrong with the econ data, the PPI, the CPI. Not good. Not good at all. I'm neither long or short USO. I'm staying out of it. Now I completely exit Exxon. Nice move. Wow. Wow. Okay. Wow. But if you still have it, good luck. I would definitely look to trim more at the 114.5 range, right? That's insane. Okay. Insane. Take it. Now I still have some Chevron. And the position is in the money, in profit. It was painful. Okay, it was painful down here. And then I trim. I've been trimming, I trimmed more than half already. I'm 2/3 out of the position. But the last time I trimmed was like 154 something. Okay, now can we get to 161? Yeah, that's where I'm aiming. If you're asking me where I'm looking to sell the rest, it would have to be 161-ish. Okay, so I'm content in holding the last 1/3 for greater profit to offset losses here. That's CVX. Now, as far as liquefied natural gas, I was bullish. I turned bullish on Cheniere. I sell put spread down here. I did have order to buy share at 150, but it never get there channel. But now, guess what? Channel high, 50 MA. No, I would say if you have it, trim. Okay, trim. Can it be a breakout? If there is a breakout, then yeah, 166 it can run. Okay, we go level to level. I don't think the 200 MA is going to be much of a resistance if it keep on going, but up there for sure if you have LNG, liquefied natural gas. But it look like overbought right here, right? So for me, TA wise, I think it's trim time. All right, I don't have much else to say about energy. Let's take a look at all the major indices. SPY. Yeah, I still have my short spread, but look like it's not gonna make money. It's expiring next Friday, so we'll see. But it came down and hold the 20 MA. Now, next week can be very critical. Can we see a break? If there's a break, then we can see the gap fill. Okay, 490s, 498-ish, 497, between 497 and 490. So it's critical. It's came down to the 20 MA, and now it better hold on Monday or Tuesday. Otherwise, I think my bear spread is gonna finally make money just in time before it expire. Okay, so be careful there. Okay, this is not the time to be long, to add in, to be risk on, as people would say. QQQ, more troubling, right? Break the 20, that's ugly. You know, I mean, is it time to short? I don't know. Okay, I definitely didn't like shorting the QQQ. I mentioned about if it break the 20, then I would consider doing some kind of bear spread. But where can it go? Can it go come down? Can we come down to the 50 MA? Possibly. Okay, possibly. If I was gonna do a bear spread, it would have to be something like if it's a bounce, on Monday or Tuesday and come back, I'm gonna watch it. Here's the plan. If it come back and reject at the 20 MA, I then would do a bear put spread 437, 427. A $10 range probably will cost me $3, but I think that the gap fill at 425, 426, it could basically come down and violate the 50 a little bit, fill the gap. Okay, it's just like the SPY. There is a gap fill down there, so it's safe to play a 437, 427 bear spread. So yeah, I didn't want to short up here, but now that it break, I think the success rate is better down here. Okay, so that's the QQQ. DR, same thing. It was tough. I did short with minor success up here or down here, but then it was stubbornly clinging on to the uptrend, but it broke. Now, like before, the 20 MA, you see, broke, well, it broke and then it bounced. It broke and then it bounced. It broke, depending on what happened Monday or Tuesday, right? If it stayed down or came back up and check and reverse, then it could be a good short potential. But if it does the same thing, right? If it come down, bounce again, bounce, 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 then it's not a good short. So give it a couple days. Even if it keep on going down, does not mean that is a good chance of success. Look, violate, looking good. Check back. If this check back fail, that would have been definitely a short. But the check back was go. So it's key. That's what I'm looking for. Okay, hopefully by just showing the SPY and QQQ, hopefully it illustrates what my mindset is. I don't mind being patient with the short. I want to see the check back to what was support into resistance, but the check back must be rejected. If the check back turn into this, then no. Okay, it turn into this, then it's no. Right? It needs to show me a check back and rejection. That means that seller get the upper hand, right? But if the dip buy come in strong, then no. So next week, very critical. Monday or Tuesday, it needs to show either the buyer, the bull regain control, or I think all three indices, basically the entire stock market, can retrace to the 50 MA by Friday. Just my take, my quick take. Okay. Since we talked about this, let's move on to the Max 7. NVIDIA, ugly, 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 ugly. Okay. Is it a buy yet? No. If you trim 900 and above, good on you. If you trim, is it buyback time? No. To me, buyback 20 MA. Okay. That would be the earliest. If you want to be safer, gap fill 822. That's where my order will be, right? I aim for the overshoot of the 20 MA down there. But yeah, otherwise, no chasing. Microsoft got the ugly stick, but overall, it's still definitely one of the Max 7 that is still Max 7. Okay. There's no reason, nothing to do here. Okay, nothing to do. I did trim on the big pop. Without saying, for me, anything that hit 52-week high, I trim a little bit. Okay, you know, that's just a rule. When something going to 52-week high, take something off, however small, 5% of the position, do it. Would I buy back 402-ish? Okay. Would I buy down here 380-ish? Yes. Would I buy down here? Absolutely. Sure. Would I nibble some share at the 50? Yes. I wouldn't care about the 20 MA. If anything, I probably have a stop for a big portion of my holding at the 20 MA. Note to self to do that before Monday open. So if there is a meltdown of the QQQ, then I don't mind getting stopped out on half of my position, say 40, whatever the 20 MA is. Okay, it's gonna be like 409-ish. But no, it's too much gain, especially where most of my accumulation was down here, right? So yeah, no, it's a sell. Okay, a lot of profit, 409 stop, nibble back at 402, back up the car at 385, 384, and then bring the dump truck at 364. Okay, if that happens, that's the plan on Microsoft. Google, coming off the bottom. Look at that, off the 200 MA, right? I trim. I trim on Thursday at the 142-ish. Yeah, it was like 142 something. I had an order in at the 50 MA, and yeah, it's a trim. Okay, I have another order in at 142.5, I think, in case it wick above, but it's a trim. Where the stop? 138, right? 138 is the confluence right here. Is well, it's below 138. It probably should hold, but if it violate that into 137.7 or so, that's where I have my stop is, and it's close. It's a very tight. I have my stop at 137.7, but that's right where the confluence is, so I might have to change that. Okay, I might change it down to say 137.2 in case one of those fast wick, the grab share liquidity grab and then bounce. I don't want to get that kind of rug pull. I hate the rug pull where they wick down like this. You get blown out of your share on the stop, and then it run. See, so as much as I like to use the MA as a stop, I tend to do it a little bit lower a lot of time, just so that I don't get one of these BS wick down. Okay, so I'm gonna change my stop there to say maybe 137, just to not get the rug pull. But then usually what happens is I have a stop right there, and then I have a buy order not that far below, like 137, 136, 135, in case if there's a nasty wick and then it bounce. I don't want to miss the bounce. So that's the plan on Google. Meta, I have my original share from way back there, so I already trimmed all of my buy the dip share here. All the buy the dip since this big up there on this big move, and I bought the dip here. It's all gone. Okay, all gone. Where would I buy? Gap fill. Okay, 469. Yep, 469. And then wherever the 469 would be the first spot, and then of course 455. So between 469 and 455 is where I would buy back what I trim up here. Tesla, definitely not Max 7 anymore. Oh, it was, I saw a couple put spread 157. My goodness. It, for a while it looked scary. All right. I'm glad I did not do 160 or above. Um, but yeah, it's ugly. Okay, it's once this broke. Okay, look, this support. Let's change this. I'm changing all the important stuff into white. Okay, yeah. Can it go lower? Yeah. 52-week low. Why not? Okay, it's stopping at where there's a big fat zone. Okay, that is the bottom, and this is the beginning of it, right? So you're talking, if you want to draw in the zone, you can, which I will, since I like to use the zone. Okay, there you go. That's a big fat zone. It's into the zone. It better hold. So can it go lower? Yes. Is it, if it tests the zone, the new 52-week low, then yeah, next up 145. At that point, it would be a buy. Would I buy? If I was to play Tesla, would I sell 145 put spread? Yes. To me, that is about the best thing to do for me, my strategy with Tesla right now. Last week, I was selling 157 put spread. Now, 145 seem a lot more attractive. I won't be doing 157 put spread, okay? Even though it can bounce, it can get out, okay? This is the zone of support, right? So it can come down quick and then either break it or bounce off. If you short up here, if you short even in the 178, 180 range, look to trim. Okay, look to trim. Trim your short. Take your profit for sure. Set your stop on your short up here at 168 to basically lock it in. The last thing you want to do is short at 178 and watch it all get back when it bounces back to 178, right? So lock it in. Have your stop at 169 ish, so that if it reverse, if this is the bottom and it reversed, then at least you lock in $9-10 of profit. That's what I'm saying. Um, Amazon still Max 7. I don't have much. I don't have much at all. In fact, it's a very tiny position, which I don't mind holding because it's so tiny. Would I buy at the 50? Yes. Would I buy at the gap fill? Yes. Yeah. Nibble, 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 back up the truck. Okay. The 200 MA is right here at the key resistance that will turn into support. Okay. So very simple strategy. If you want to sell put spread going out 2 months, 143, 140 or something like that, right? So to me, it's if Amazon come all the way down to 144, yeah, back up the truck, okay? Back up the truck. Is it possible? Anything is possible. Netflix, very, 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 very strong. Very strong here. Very strong. Probably the best of the Max 7. Do nothing here. I have nothing. I have nothing. I have trimmed everything already. Gone. What a run. Actually, I trimmed even earlier. I trimmed way here. I have nothing for the past 6 weeks. Nothing. There has been on this gap up, I trim, and then I have a buy order down here, which ain't gonna happen, right? It's already expired. Would I buy at the 50? Absolutely. Absolutely. It's going to line at 560, right? It line up with the gap fill right here, 560. So yeah, the 50 MA, in fact, on a major pullback, if the 20, in fact, I'm going to set an alert right here to know that it broke the 20. Breaking. Okay. If that's happened, I would probably look to sell a put spread, say 550, 520, something like that, right? Yeah, I like it. I would start to nibble at the 556 range. Add more at the 536. Add even more. Yeah, down here for sure. Okay, this is. Let me change this line. That's the line that will be back up the truck moment. There you go. Okay, but the 200 MA is going to be rising into it. 480-ish. Yeah, back up the truck. If there's a major NASDAQ pullback. All right, we're done with the Max 7. Farmer. FV. I bought some. 178. Slowly building my position. Okay, I keep trailing up my orders on the 20 MA. Small. I'm adding small. I'm looking to buy much bigger. Like I would double up my position on a check back to the 50. And if it come back into this zone, 167-ish, that's when you pack up the truck on FV, right? So right now, small position. In fact, I am content in what I have now, and I don't think I have any more order at 178. I did not put any new order in after the last one triggered yesterday. It has have a great run. Okay, FV have had a massive run since November, right? It barely checked back to the 20, but as always, the 20 will fail eventually, and then it will need the 50, right? No doubt the bull trend is still intact, and I like it. And this gray zone here is going to be a great place to back up the truck. JSK. There you go. Here's an example of another similar situation where the breakout of the 20 was bullish for a long time, and then it breaks. I did not have, unlike FV, I did not have a trailing buy order because this is too much too soon, right? Which is fine. Would I buy at 41? Yes. Yes, 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 yes. Okay, so right now I'm waiting. I have an order. It was, my order has been riding the 50 on the way up. The last one that I had was 41. I might revise it up to 41.1 just to have it there, but the back up the truck moment here would be at 40 and below. If it get into 39 to 40, you betcha. But it's stalling out where it's supposed to, right? Is it a surprise? No, look. Okay. It's in that zone. Okay, let's draw in the zone. It's pausing at the next level where it struggled before. Okay, it's not, nothing is random. Right? Barely. No. Yes. No. Yes. Fighting to stay. Fighting. Fighting. And then fail. So is it going to be a struggle up here? Yeah. But I have a small position. If I have a large position, it would have been a definite trim into the resistance zone. Right? So it has a great run. No doubt about it. Yeah, I rode it from 33, 34-ish to exit at 39, and then on this breakout, I add a little bit, I roll it up, I still have it, haven't trimmed anything, but on the next back up, if it come back, I might trim to be disciplined. Okay, that's the right thing to do because this could be a long time resistant. It had a fantastic run. Um, XBI is back into the zone. Okay, for those that follow me, I shorted 93, 86. I closed it out for a small loss and a small gain. I had two bear spread. That was sure. For a while, I'm looking, oh, I should have kept it. I made the money. No, it would have been a loss no matter what because it bounced. I add a little share. I took a flyer into the position because to me, what was multi-year resistance should be strong support, and so far it is. Would I add in the 94 range? Yes. Would I add coming off the 50, rising 50? Yeah, I have an order in at the 50. If it get there, that's fine. Okay, to me, if the 50 is violated and it fall out of the zone, then yeah, then the bull trend is over. Okay, nothing you can do about it. But now trust the technical. If 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 this zone is support, that's fine. Consolidate, that's fine. Uh, Pfizer, uh, uh, yeah, this white line, yeah, it's all right. It's doing what I expect it to do. It's not doing anything that is like, oh my god, no. Just give it time. All right, I'm no longer bearish on Pfizer, but I'm also not saying it's time to add. No, it's not. It's getting close. It's getting close. Okay, it's getting closer every week. It's a lot closer now than it was over the past 6 months. You haven't heard me talking anything positive about Pfizer in the past 6 months because it last time it was close was back in August. Goodness gracious, right? And then it failed miserably. Miserably, it failed. It have a chance here. It have a chance here. Rejection, rejection. So we're back to the point of rejection, which I think I'm more inclined to say that this is it, but prove it to me, and then I change my tune. Let's see, Amgen, ugly. The right thing to do was to stay out of it. I'm glad I took the bitter lesson. I still have the share, a small position, okay, 20 shares. It still hurt, but at least I did not get caught in any more put spread that I was playing for a long time. I was playing put spread on Amgen, seemed like for months and months and months, and boy, I took the lesson 2 weeks ago and said, that's it, I'm done. Okay, I'm done. 270, playing around 275 and below was too dangerous, and yeah. Now, down here, the confluence, okay? You get the downtrend, the channel, and the 200-day MA. To me, I'm buying. That's where I'm buying because I think that is the spot that can be the bounce. Okay, so for me, 264, 265, my order is 264. Okay, I think 264 is the spot to buy for the bounce. Let's talk a little bit about biotech. I add a little bit of ARGX. My next order is, I believe, 366. So if you get to 366, 360, down to all the way down. Okay, so between 366 down to 327, I have orders. It's crazy. I have a couple share. I trim up here. I add here, and yeah, it's doing what it's doing. Okay, it's very volatile. Play small, play quick. I have cross rocket. Um, would I add at 26? Yes. I've been adding below. The right thing to do was sell up here, right? I trim. I buy. I trim. I buy. I trim. I buy. I trim. It's been a couple trip, 3 trip so far, and I think 26.17 would be a nice spot to add some more. Would I trim above 28? Yeah, if I see 28 and above, in fact, I'm gonna put in an alert here at 28.29, so I know that it's near. Trim time. Okay, that's it. Let's finish up on CYTK. I talk about this where I said I'm not adding anymore. On this, I was adding. Okay, I bought here. I bought here. And then I bought a little bit more here. And then I said, okay, look like it's not going to hold. Look like it's going to slide into the 100 MA. So that's where I'm buying. Whenever it get there, I will add a lot more. Okay, so for now, if it's 60, that's fine. Okay. Let's end biotech on Alnylam. I add at 146. I had a put spread at 145 that expired worthless yesterday. So I'm glad that happened. That's one of the reasons that I did not buy more, because hey, it was, I trying to risk manage my position. If I have a put spread at 145, there's no way I will go and hawk wire buy at 147 or 146. I can't. Okay, I might have to swallow 100 shares at 145. So I add very small, and on pullback, yeah, I would buy even down here in the 140. All right, so the channel low, play the channel. I have a small position that I really like down here. Okay. All right, let's move on to banks. Goldman Sachs, I still like. I add Goldman Sachs at 384. Hey, it's no doubt this is the white line. Let's make it the white line. Okay. Strong battle here, but that's okay. All right, we can go. We can really go up here. Okay, to me, yeah, there's a potential 10% run here in Goldman Sachs if we can break out. This is one of the last time it was here, rejection. This time, okay, so there's definitely a change in sentiment, and I think the path of least resistance for Goldman Sachs is higher. That's why I am bullish. Okay, I was cautious here, cautious here, cautious here, cautious here. But if you follow me since February, I said no. It's looking strong. It's looking stronger. So I have not changed my tune. Okay, I changed my tune from cautious into bullish here. Morgan Stanley, which I like more. I like Morgan Stanley at this point right here. For those that follow me, back in January, I said, yeah, I like Morgan Stanley on this pullback here, and I've been selling put spread and adding a few share here and there. But yeah, I like it. I still like it on a pullback into 87. Yeah, 86. Buy more. Sell put spread where I'm moving my put spread from 84 and below to 85 and below. Okay, this is, I like it. I like Morgan Stanley here. I have a bear spread on JP Morgan. I had one that expired last week, last Friday, lost money. And unless this thing break, then the one expiring this Friday, this coming Friday, will be a loser as well. Okay, so it's been tough. It's been tough. I mean, I waited to short JPM at 188, right? And oh my God, okay, I shorted. I do those bear spread back there. And my God, it's so strong. Part of the reason, if you didn't follow the news, is the Fed took action the last couple of weeks to change the Basel requirement. You can Google it and read, but it definitely allowed the bank to expand their loans. Okay, it's it's not a good thing. Relaxing the rule so that the banks can loan out more money to make more money, to let consumer load up on more debt. Hey, that's why the banks are so strong. Anything that allow the bank to loan more money out is good short term. Bank of America, which I was more bullish on, yeah, it had a great run, right? Would I touch it here? No. Would I buy it on dip? Maybe. Would I buy at the 50? Yes. Would I buy at this gray zone? Absolutely. Absolutely. I still like Bank of America a lot, okay? More than JPM. KRE, regional, looking not so strong. High interest rate might hurt the regional again. To me, the safest play to do with KRE is sell put spread where? 44.40. Okay? Use this as your protection. You got the 200-day MA rising above it too, so you got a couple of level of protection. But I'm cautious here with the regional bank with high interest rate, because who knows? Who knows? We could have another failure coming down the pipe, okay? And you can see a nasty pullback. So for now, I'm not buying any share. I would rather play the 44.40 put spread game on KRE. Now let's end the financial on another short that was a loss. AXP. I short it, put on the bear spread. A little bit too late, right? If it was 215, I would make money, but no, it's up here now. Can it break down? Yes, but just like the DIA, the SPY, the breakdown, I'm not going to go too short. It need to show that, you know, the check back to the 20 MA is rejected, and even then, it's short-lived. Okay. See, look, you got breakdown, check back, and go. Right? You want the check back to happen quickly and keep going. You don't want this, yeah. It's hard. It's hard to short. Okay, that's why, you know, to play the bear spread game, you gotta be quick. If you're not quick enough, stay out of it. That's what I do, right? You know, every time I play, so far it has been a net win, but it was win in January and February, and then most of what I did in March have been losers so far. Most. Okay. Speaking of loss, IYT. Okay, so I shorted IYT, another bear spread that also failed because I did a 60 I did a 68 63, right? And of course the breakdown happened a little bit too late, right? This is just so strong. Okay, it was on this move here. I put on the bear spread. I figure, oh, you know, it's topping out. especially when the top out zone is 66 here, right? And boy, was I wrong. Twice I was wrong over the past 3 weeks. So yeah, it's unfortunate, but that's the bear game. Okay, timing with options are tough, especially with bear play. Let's end this stream on Met Device, Ab- Abbott, 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 Abbott. Oh my goodness, what a disappointment! All right, so I was bullish, so I had Abbott. I completely sold out here, right? And I turned bullish here because of the breakout. And for 3 weeks, it was looking good. It was riding the resistance, potentially a breakout. And then baby formula lawsuit verdict, nasty. Now I have a 114, 110 spread that I sold last week that is expiring this coming Friday. Would I look to close it out? Yes. Okay, to me, um, where is this going? I don't know. Okay, to me, once it breaks support and gap down like this, the best case scenario is sideways. I don't expect a quick reversal. I don't expect the bullish narrative on Abbott is over. Okay, so what was resistant and then potentially turn into support is now likely resistant again, right? Because it gapped right below it and bounced right. It came back right to the 50 MA. So yeah, I'm not. I on Monday and Tuesday, if Abbott stay above 115, you betcha I'm closing out that put spread. I'm not interested in exposure in Abbott for now. Medtronic, um, definitely the white line was a problem. And would I add buy back what I trim up here? I might at 80 at the 81, 82 range. I might. Okay, I might. I'm not bearish on it. EW, which I trim a lot. Yeah, looking good. Looking good. All right. The white line, breakout, right? Can it run? Yeah. How more? How far? How much longer? For now, I'm watching 98, 97, right? I'm not trimming. I don't have any more trim order because where I'm looking to trim is up there, 105, 106 area. Okay, to me, that's likely a tougher resistant. Yeah, if you have EW, that's the spot. I don't see a reason. I don't see a reason for EW fundamentally to push it to 181, but I do see a potential of 105, 106, which I will likely completely exit and be happy with a nice gain. It's been a frustrating year and a half, right? Buying EW, rolled up the profit, didn't trim enough, suffer a 9 months long decline and rebound. Yeah, you can look at this right here as a cup and handle pattern, right? You get the cup and a handle, and then it can run. If you want to talk TA wise, I think that's cover about everything. Yes. Let's end on the disaster du jour yesterday. Adobe. Yes, let's talk about Adobe before I sign off. Alrighty, alrighty. Let's talk about Adobe. This is ugly. This is all right. I thought for sure 528, 530 would be the spot. Wrong. It took it right down to the next area. That was supposed to be support. Wrong. talking about being wrong multiple times. But here's a bright light, okay? The shining light on an ugly day yesterday was I talked about selling put spread down here because of this consolidating zone, and that turned out to be the spot that it came down. Okay, 485, 475 was what I thought is going to be the zone of potential support next, and it did come down, so it did touch that, right? So I am not bearish on Adobe. If anything, I am very bullish on Adobe long term. I think if you believe in AI, and I am, when it comes down to hardware, no doubt NVIDIA. And then next up, AMD, right? I have been playing AMD put spread the past couple of weeks with good success. When it comes down to hardware, no doubt, NVIDIA, AMD, and if you want to go even deeper into the hardware thing, you can go with Dell because they make the server, right? They have great numbers. You can go look at Dell. And then on the software side, application side, you have Microsoft, you have Google, but I like Adobe even more because I think the monetization of AI is better with Adobe and Salesforce. Okay, I don't talk about Salesforce enough. Maybe I should, but to me, Salesforce and Adobe are the hidden gem. Well, not really hidden, okay, but to me, they have more monetization power than the Google and the Microsoft out there. Um, this is a buying opportunity. I bought. I built a. Is 24 shares a lot? No. But given the price, yeah, 24 share is 5 figures position, right? So it is sizable, but can I add more to it? I wouldn't mind, but no rush, okay? This is the first day of a meltdown. There is no rush to chase into it, but long term, I like this a lot. I just need to, it just need to show stabilization, right? There is no need to chase into it. I sold put spread that expired yesterday. I sold put spread that will expire this coming Friday, way below. You're talking way below, okay? And that's fine. Um, there's no, no worry there. I think the short-term bottom is in, but it's just need to prove it, right? It's just need to show stabilization. Give it 3 days. By Wednesday, if it's stabilized, then I might add. Now, can it go? If the QQQ is breaking down as I think it might, then there is no reason to not think that Adobe can go down and test 475. Okay, so for me, if I was to buy anything, 475. If I have to add anything, it has to be 475, or if Adobe get back into this and turn and break out again. But for me right now, no need to do anything. Wait for how the NASDAQ react the next couple days. And if I were to buy something, 475. All right. And then of course, as crazy it is, 460 something. All right. The next level. We go level to level. That's all you can do. And that's it for this week. Hopefully the last hour was useful. Enough yapping from me. Yeah.